what are some other positive fundamentals that you feel are currently underappreciated?
Well, I'd say there are a number of them. I mean, I think the market has really been focused on a lot of false negatives and not a lot on the positives of the world. And that's not to say that the world is a perfect place and that there aren't problems, there aren't economic weak spots and those sorts of things. But by and large, the global economy is in very good shape. You look at global GDP growth, and it's been growing at a very steady rate. You look at yield curves around the world, and despite all the fears about inverted yield curves and what that might mean for economic growth, they're positively sloped most everywhere in the world, particularly if you look at the global yield curve environment. I mean, we're in an environment today where people get overly focused on their home countries and the monetary policy conditions there. But in reality, big banks, big multinational banks can do business all throughout the world and borrow and lend all throughout the world. So what really matters is what's the global lending environment, what's the global yield curve environment. That remains very positive. You look at purchasing managers indexes, which are just surveys of managers that basically ask, how's your business going and how do you expect it's going to go? Is it getting better or worse, staying the same? Those are all pointing to continued expansion. You look at inflation rates everywhere in the world and they're exceptionally tame. And that's been particularly true in some of the higher inflation countries in the world here recently. I mean, even outside of the developed world, you look at markets like China, Brazil, other emerging markets that historically have fought real inflation problems. The global trend of inflation is a pretty significant deceleration. And what that's allowed for is central banks to moderate their monetary policies. We're still in an environment globally that's still kind of a global Goldilocks scenario. You've got good growth, you've got falling inflation, you've got good corporate results, and yet you've had all of this fear baked into equity prices that has led to some short-term negativity in pricing, but we think creates an environment for a strong bounce back as people come to realize that their fears aren't as bad as they thought they were, and actually reality is pretty good.
If you asked most people, is global trade growing or shrinking? Their perception from kind of reading common media would be that it's shrinking, when in fact global growth has continued at a pretty steady pace to grow at about 4% a year. And by that I mean the growth of globalness in trade, not all the stuff people talk about, is strong, positive. Again, there's pockets of weakness, most of which are tied to unique country-specific things. We could talk about those if you're interested. But pockets of weakness don't show the overall trend. The overall trend is strong at a time when people think it isn't. That's a tremendous positive.
We always pay attention to the leading economic indicators, which is a very powerful forecasting tool. And what you see is in most parts of the world, the leading economic indicators are high and rising. That to us says good times, not bad times ahead.
You know, there's this saying in investing that in the short term, the market is a voting machine, in the long term, it's a weighing machine. And basically what that means is in the short term, sentiment plays a big role in what happens with stock prices. They can push things higher or lower, almost irregardless of what's going on fundamentally. But in the long term, that weighing machine feature really weighs out, meaning it's really the fundamentals of the market that end up driving things with a long enough time horizon. And I think what you saw last year, kind of speaking against everything we've said here fundamentally, last year all these positive fundamentals were in place, but that voting machine mechanism took a good fundamental year and turned it negative. And so as we look ahead to this year, why do we have confidence that not only are those fundamentals going to remain strong, but maybe sentiment is going to turn around and people are going to start voting the other direction? Well, I think as you look at the big issues that people were worried about last year, whether it's the Fed, whether it's the yield curve, whether it's trade, whether it's China's economy, you see a lot of reasons to think we're going to get some relief from those concerns this year. We don't know exactly what's going to happen, of course, but already the Fed has changed its tone significantly. So if you previously were worried about runaway inflation driving the Fed to be very aggressive with monetary policy, inflation expectations have come down. Actual inflation data has been very modest. The Fed has moderated its tone. So there's one issue that's started at least to some degree to go by the wayside. With China and trade, we're seeing the Chinese economy continues to grow well. As mentioned, global trade is actually at all-time highs today. So that concern starts to fade. And maybe we get a trade deal between the U.S. and China, maybe we don't. But in one way or another, that fear starts to fade as well. And so you see a lot of opportunity for the concerns of 2018 to at least lessen or maybe even reverse this year. And so on the back of that weighing machine mechanism, that strong fundamental environment, you take those negative votes from last year and turn them into positive votes this year, and you can see how that can drive very strong stock market results.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.